there, Jody mortgage advisor with Universal Lending Home Loans. And if you wouldn't mind, please subscribe to our channel. This lets us know that you enjoy what we're putting out. And it also will send you a notification each time we put out a new video, which is usually 2 to 3 times a week. So today I want to talk about interest rates. Whether you are looking to purchase a home and take out a mortgage or refinance an existing mortgage, you're most likely going to be looking for a mortgage lender. And one of the things that people most commonly look for when they're looking for a lender is the interest rate. They may have been told by a parent or a friend or a coworker that they need to look for the lowest interest rate. Now, owning a home is most likely going to be the largest investment of your life. It's going to be your largest asset and your largest debt. So properly planning to manage this debt can save you tens of thousands of dollars over the life of your mortgage. Now you may be thinking, getting the lowest interest rate is going to help me save the most amount of money over the life of my loan. But that is not always the case. Did you know that the lowest interest rate most likely comes with the highest fees? And depending on your short and long-term goals, the lowest interest rate does not always make the most sense financially. If you are simply shopping for the lowest interest rate, it may cost you more money over the life of your mortgage. But how do you know which interest rate is best for you and your unique situation? I have been a mortgage advisor for 26 years, and I rely on a mortgage planning tool called a total cost analysis to help all of my clients determine which interest rate or loan option is going to be in their best interest. It is so important to use a lender that will prepare a total cost analysis or a similar tool for you. It's going to look at your loan amount, different interest rate options, and all of the fees associated with each rate. It's going to compare monthly savings, short-term savings, and long-term savings. Together, you and your lender should be discussing how long you plan on being in the home, if you plan on keeping it as a rental after you move out, and at what age or in how many years would you like to be debt-free? All of this information is so incredibly important to help determine which interest rate is going to save you the most money. Now, when we go over the total cost analysis together, we can determine the break-even point for each interest rate. That is, in how many months or years will you recoup the fees associated with each interest rate? Also, at what point the actual savings is going to kick in. So for example, if you only plan on living in your home for 5 years and the lowest interest rate will take 8 years to recoup the fees, then the lowest interest rate is not your best option. Now, if you plan on purchasing a home, living in it for 5 years, and then keeping it as a rental and purchase a new home, and the lowest interest rate takes 8 years to recoup, you're going to start seeing the savings after 8 years. And in that particular situation, the lowest interest rate most likely makes sense for you. Now, there are other things to consider as well. Where are the interest rates in relation to the history of interest rates? Is it possible that interest rates might be going down in the next 3 to 5 years and a refinance might make sense? If that's the case, paying for the lowest interest rate now might not make sense because you could be refinancing into a lower rate in a couple of years. If you're in an FHA loan or a conventional loan with mortgage insurance, and you're going to be in an equity position in the next couple of years to refinance and get rid of that mortgage insurance, taking the lowest interest rate now and paying those fees, again, might not make sense. So these are all things that you really need to consider, and you need a financial, a mortgage advisor that's going to ask you these questions. And if your lender does not use a tool like this, it's going to be very difficult, if not impossible, to determine which interest rate and fee structure is going to make the most sense for you. So I assist all of my clients in coming up with a mortgage plan that's in alignment with their personal and financial goals. It is a holistic approach that is clear, concise, and easy to understand. Determining your mortgage plan should leave you feeling empowered and confident and not overwhelmed and scared. I would love to be a part of that process. If you have any questions, or if you would just like to see a sample total cost analysis, I would love to provide that to you. So again, please subscribe. Thank you so much for watching our video today, and reach out if I can be of assistance.